Hello, hi guys. This is a surprise session for you. So we're gonna discuss about capital call accounting entries in this session. So this session would be for next 10 minutes. But before start with the session, let me just tell you I have launched private equity fund accounting course on Udemy, or even that course recorded sessions. You can opt it from the GMT institution website as well. So I have post course, I have covered all important aspects including journal entries and all right, including like what is capital call distributions, the calculations, then different aspect of private equity funds, like fund structures and everything. So if you are interested, so quickly enroll that, because course which is available in very nominal amount, just quickly go and check it. All right, so let's start to the session. And yes, of course, don't forget to like this and share this content with others. All right, so in this session we are going to discuss about journal entries, but yes, we're gonna only cover one portion, which is capital call. So let's discuss that out, what is capital call and how we can prepare accounting entries in the books of account. All right, so let's say if I talk about capital call, capital and call, see, both are two different things. Call, it means send notice. Call, it means send notice. But send notice to whom? Right? Send notice to whom? General partners and limited partners. General partners and limited partners. But basically, you would see, in a scenario where we most of the time issue the notice to the limited partners only. Why limited partners? Because limited partners, they are the investor, but that doesn't mean will not send notice to the general partners, because general partners and limited partners both work as an investor. Both work as an investor. And then who manage the fund? Then fund manager manage the fund, right? Fund manager manage the fund. And basically fund manager initiate notice, or fund manager send this notice, you can say send this notice to the investor. Okay, so why fund manager will send notice to the investor? See, when we say capital, it means it's a fund, right? And fund is required for what? Fund is required for investment purpose. If you don't have a fund, then how fund manager will invest? All right, so fund manager basically need fund from whom? From investor. Fund manager need a fund from whom? From fund manager need a fund from general partners or limited partners for investment purpose. And once the fund manager received that fund, of course fund manager will invest that funds in different variety of financial instrument. It can be CLOs, it can be CDOs, it can be, let's say, obligations or normal equity bond swaps, or it can be anything. But to do this investments, so investors need to pay capital through capital call notice. Notice is just a proof that help you to send reminder to the investors, right, who have committed. It means, see, in a private equity business, I'll tell you, so it's a partnership business. General partners and limited both work as a partners. And when we say partners, so partners always sign deed, or limited partners agreement, right? They always sign deed or limited partners agreement. Once they sign general partners or limited partners agreement, so it means they basically commit each other. Okay, again question would be like, sir, why they commit? See, they commit because they are partners, and their percentage, their capital, profit and loss account ratio, everything, it should be defined. If that is not defined, then it becomes difficult for them to distribute or allocate that. And as an accountant, think about it. What if you don't have a DID or LP in place? Then how will you initiate capital call? How will you distribute return on investment to the investors? How will you allocate expenses and income to the different partners account? Because in a partnership account, it's mandated to allocate their capital, their distributions, withdrawals, gains and losses to the each and every partners on the basis of their investment percentage. Why? Because if you don't allocate, then trust me, each and every partners, because see, here they are wealthy investors. Wealthy, it means their wealth would be very high. Those are wealthy investors, so it means it's mandate to the all wealthy investors to file their tax returns at the end of the, let's say, every quarter or maybe every year or financial year, I would say. And if you don't allocate the return or let's say expense income, whatever it is, then investors will not be able to take the tax advantage, or maybe even though they won't be able to pay taxes to the government. So that's what it's important to understand the aspect of this private equity or partnership business. All right, so now I hope you got the intention of this partnership did or commitment, and that's what LP plays crucial role. And as I said, commitment, it's again later of you can say interest, or later of they are committed to pay the capital call amount as and when capital call amount would be due, so they would be able to pay it to the fund manager for investment purpose or for again expenses purpose as well. If partnership has any pending expenses or due expenses, in that case also fund manager can initiate capital call and ask investors to make a payment. All right, so now if you see, when we talk about capital call is the part of commitment, right? Let's say for example, let's take the example, total commitment is 1 lakh, and this time capital call is, let's say, 10,000 rupees. So it means this basically capital call amount is a part of commitment. So it's like it's your credit card. Let's say your credit card limit is 1 lakh. So you can utilize that amount, credit card amount, up to 1 lakh, right? So depends. Let's say this time you're looking for a 10,000 only. So you can withdraw 10,000 only, or you can spend 10,000 only. The similar way, but again in a private equity, if you want to, or fund manager want to, see, investors give a credit facility to the fund manager, and then fund manager utilize that facility for investment purpose. And let's say if fund manager has any investment opportunity, then fund manager initiate capital call to the investors, and of course investor will make a payment on that due date to the fund manager. And once fund manager received that fund, then fund manager invest that fund in CLO, CDO, obligations, ABS, MBS, swaps, equity, bonds, and any other financial obligations, or it can be anything, I would say, even distress bonds or junk bonds as such. All right, so with that said, now here we're gonna discuss about capital call accounting entry in the books of fund. So note it down this. I'll quickly I'll take a pause for 10 seconds. I know this is not a something where you are in my live session, so that's what I'll allow you to note it down or take a screenshot. So I'll erase this, and then again I'll jump on the accounting entry part. So your time starts now. I'll wait for 10 to 15 seconds. Just quickly take this screenshot, because this will help you to prepare for your interview. All right. All right, so let me directly now jump on accounting entries of capital call. See, there would be scenarios where, let's say, due date is today, but that capital call payment, let's say, not yet received, but you have received confirmation from investor that they'll make a payment in next week. So it means you can say that situation would be your due capital call. Due capital call. If you see any due capital call, so it means that becomes receivable for the for the fund, right? So when we say you, it means you can treat as a you're a fund manager and this capital call is due to receive you. So right, so it will receive to you, and in that case your accounting entry would be receivable capital call account debit, whatever amount that you would see, right? So that amount you can note it down there to share capital, or maybe capital call account debit. So this is how you would prepare accounting entry when you have a due capital call. As I said, so the date is already passed, so it means it's a due, and in that case your accounting entry would be receivable capital call account debit to share capital or capital call account credit, not debit, my bad, credit. All right. So next, when cash payment received on due capital call. So once you received amount on due capital call, your accounting entry would be cash received account debit, whatever amount would be that you can of course update, cash received account debit to, again receivable. Now you will have to remove it from the balance sheets, because once you receive that cash you cannot carry receivables. So remove that receivables, and your accounting entry would be cash received account debit to receivable capital call account credit. Debit versus credit, it will out automatically. All right, so you will have a net accounting entry, basically cash account debit to share capital account or capital call account credit. So this is how we prepare accounting entry in the books of LP, means limited partners, when you have a due capital call. So note down this accounting entry. I'll take again small pause so that you can note it down and practice it out. All right. All right. So another example, let's say when you have a normal, let's say capital call is not due. On time you have received capital call amount from XYZ investor, right? So capital call you have directly, you have received it. Capital call. Directly you have received. Capital call received. What would be the entry in that case? Of course, cash received. Cash received account debit to capital call account credit. Amount is whatever that amount you have, you can record. See, when actually you received capital call, you can record accounting entry like this. All right, cash received account debit to capital call account. Now, so one more question that I would like to ask you. What if, let's take the example and practice it. Post practice, you can post your answer in comment section of this video. I just want to check it whether you guys are able to understand or not. All right, so let's say capital call due amount is let's say USD, but investor paid 1,30,000 USD. So again, for you, the expectation is prepare accounting entry and tell me why investor would have paid payment in advance like this. Means almost you have received 10,000 extra. So what could be the possible reasons and all? All right. So you can practice this, question. Trust me, if you practice questions like this, your 60% into preparation, it will be done automatically. It will be done. All right. So do this practice as much as you can and post your answer in comment section. And definitely, if you in next session, I'll cover this as well. So what would be the accounting entry and all. So we have started this series for you. So we'll discuss each and every aspect of each and every activities which happened in maybe fund admin, hedge fund, mutual fund, fund of fund, master, feeder. There are a number of things so which we'll discuss and give you real insight as well. So means you can apply all of this insight in your day-to-day job operations. And if you like this video, just don't forget to share and click on bell icon, because when we upload next video, so you will get notification. And you can share this content with others as well who are looking for such a content and all right, so we'll see you in next session. And of course, meanwhile, as I said, if you're looking for any course, you can enroll my recorded course so that you can practice as much as you can, or you can go through it step by step modules. All right, so we'll see you in next session. Thank you very much for watching this.